TraderInsight.com. I'm Adrian Mans. Let's talk about what we did in the first hour trading pit on August 1st, 2018. So usually what I talk about here are those fastball XRV setups. That's because this is sort of a support video for that group. But we've got a bunch of new people trying out the Around the Horn trading plan, and I know you heard some talk in the first hour trading pit this morning about doing pivot trades and all sorts of other fun stuff. I'm going to let Julie wrap up the rest of the trades for you like she always does, but I want to go through in a little bit of detail what the reasoning was behind the early entry in Equifax that you saw everybody take. Those trades were carried out by a bunch of the guys who have been to my income trading boot camp, coaching program, and mastermind group, and you can see why it was called that, because this morning the entry on Equifax down at $125.38. It's a short sale down below the prior session's low, so you'd be getting in about $125.28. $124.70 was the initial target, and we had a stop on this one, $125.72. So how'd those guys manage to figure out to get into this trade when it was way up at $126.32 and so far away from that $125.38 entry? This 126.32 line is what's called the central pivot. That's the prior session's high plus low plus close divided by 3, and it roughly defines where floor traders are going to place the value line for a stock on any given day. So when price comes up to this pivot from below, what we expect to see happen is a bounce back down towards this support 1 pivot, which is a derivation of that central pivot line, right? It's just a mathematical manipulation of the central pivot, and that's what gives us our support and resistance lines around the gravity line here, if you will. So when price came up and hit the central pivot, we did not have confluence right at the pivot line. But when the boot camp guys saw this level right here, about 126.55, tested once, twice, with a failure to violate, what they saw as an opportunity for an entry was the move back down through 126.32, back down through that pivot, and then our first target on that down into this support range from the prior session, $125.93. So that made for a nice first test. If you got out there, that was 39 cents a share. Then it came back up again, up through the pivot, and just picture perfect, an infield fly setup. If you've been to boot camp, you know exactly what that is. If you read the book, you know what it is. But we use those intraday just the way that we use them on daily charts. Stock came back down through, and this time around, when we got into that 125.93 range, we were looking for a little bit of lower of a target because of this tail down here. And at that point, we saw this cascading move lower that got us all the way down into the 125.38 entry price, and then in fact kept that trade open until just a few minutes ago when it hit the actual profit target from the trading plan. So in this case, 124.70 was the ultimate stopping point for an entry that got you in from $126.32. So what you see here is over $1 in additional profitability added to what was already going to be a trade that hit the profit target. I just wanted to make sure that those of you who are new to the Around the Horn trading plan, who are watching this stuff for the first time, weren't confused by what was going on in the room this morning and all that talk about these trades that originated at this pivot line. Those are just the things that our alumni have tucked into their toolbox and are ready to capitalize on when the opportunities present themselves. So there you have it. If you have any questions, shoot me an email, adrian@traderinsight.com. I hope you had a great trading day today and an even better one on deck for tomorrow. It's the best trader education anywhere, only from traderinsight.com.